Hello again, everybody, and welcome back to the Accelerator with Michael Conniff. That's me. We are here as a podcast to bring together entrepreneurs, startups, and founders with the money people, the money types, angels, VCs, family offices, and investment firms. And we want to remind everybody that we make no recommendations to buy or invest in anything. You should do your own research. That's up to you and not us. What we try to do is find founders that we like and also find venture capitalists and angels and investors and family offices that we like. And to that end, I am absolutely delighted to be joined by James Spurway. He is here with us today from Indochina Consulting. And he is, I think you've been called the fundraising angel. So you're really coming to us from the money side. With 31 years in Singapore under your belt. That's pretty amazing. You've been there a long time. And I want to, before you start, and first of all, welcome, James. Great to have you. But
lovely to be here.
I want to, and I should point out he's from Australia, if you're wondering about that accent. I never do this, but I'm going to do this for you. I want to read your LinkedIn blurb. It says, James Spurway, I am a purpose-driven, impact-focused, angel lead investor who helps first-time sustainable business model founders navigate their external fundraising journey. And I knew when I read that I could not say that better than you, and you managed to say that without any commas. So my hat's off to you. That was not easy. But what led you to this philosophy after 31 years in Singapore?
I think you probably have to go back to my background, the start of where I came from, to understand why I do what I do. It's kind of intertwined, I think, in most of our stories, right? It's the kind of reasoning behind the person we are. And I come from a very small rural setting in Queensland, Australia. I'm a farmer's kid. In fact, I'm the youngest in a tribe of 6, and all the older ones, 5, were sisters. So I'm the only boy in the family. And I think I learned early that in our case, we were dirt poor. I mean, the concept of dirt poor, people just use that as a phrase. We actually had a dirt floor in our house. So, dirt poor meant a lot more different connotations to us. So if you grow up poor, and if you learn that hard work gets you where you want to go, but you kind of get some help from outside, you kind of realize, I think, pretty early in life that giving back is almost like a natural thing. Even though you didn't have much, or none of us had much, I think we learned very early that part of the life was just to give. You gave what you could, and that kind of came back. It's just this kind of concept of, if you like, virtuous circle, or the concept of karma here in Asia. And I've always been that way. And so when I started my entrepreneurial journey some 31 years ago, I suppose early in the piece, I realized that I was good at making money. I was good at doing deals. But what I really enjoyed was seeing other people succeed. I mean, don't get me wrong, I was happy to kind of get out and succeed and do my thing. But I think what I got the most buzz out of back then was helping other people who were kind of breaking into the same thing that I was trying to do, just get through those initial periods of time and find their feet. And that's kind of like the start of my, I suppose, quote unquote, mentoring side of my fundraising and my angel investing. I've always helped and always loved helping mentor young startups or old startups, it doesn't matter what their age was, to get through that initial rough period of adjustment from corporate life or something else to kind of this crazy roller coaster we all know as a startup.
Like a lot of angels and VCs, you were initially an entrepreneur. What was your first company?
So my first company existed up until 5 years ago. It ran for 23 years consecutively. It had the name Indochina in it as well, because back in the day, in the early 90s, Indochina was a defined area of Asia. It was Vietnam, Laos, and Cambodia. And those 3 countries or markets were opening up when the rest of the markets, like China, let's say Hong Kong, Indonesia to a certain extent, Malaysia, Singapore, were considered established. So hence the Indochina. And I was sitting there in Vietnam in 1990 and left a high-paying job as five-star general manager of a hotel to start my first company. So Indochina Group was actually a holding company we set up. There was my wife and myself. Funny thing, right? A side story. Doing business with your partner, interesting. I jumped out of work into a startup and had just been married literally a month or two before, and then was working with my wife in the same company. But it worked out. But we had three more investors. There was an engineer, an architect, and someone who was more or less a project management person. And our first business model was to help 500 sort of like the top 500, what do you call it? The Fortune 500 type companies or the Fortune 250 companies who wanted to come into Vietnam, help them establish usually an operating base, which meant a joint venture partner or some kind of partnership. Oftentimes it meant building something. They wanted to build a factory or an office or whatever. So we did that local market entry and then also development work for them to get them where they wanted to go, to start them off in their business. So we needed to have engineering chops, which we did, and building chops. But I was really just for want of a better word, I guess I was a lobbyist. I mean, I used to find the right partner, get the government side on board, get a license. Oftentimes you needed a joint venture license followed by a building license, an operating license, all that sort of stuff, regulatory red tape that the former communist, now socialist Vietnam started off with, and they streamlined it since. But that was my business. I really didn't have any concept of anything digital, because I mean, we're talking about early 90s. Didn't have any concept of anything that would be scalable. It was just a business that would operate. It was working well. It was cash flow, obviously positive from day one. It allowed us to have staff, and it kind of allowed me to travel all around Vietnam doing deals, which was in those days fantastic.
And did you speak many languages? Did you speak Vietnamese?
I didn't when I got there. You have to understand, Australia is a monotone culture. We are, I guess now, not quite the same as back then. So back then, you would have the traditional options in school. I went to a public school. So the traditional option was if you went to high school, I think the last 2 years, correct me if I'm wrong, last 2 years or maybe in the last 4 years, you had language as an option. So you had French or German. So again, 60s Australia was a little bit like an overhang from the British Empire still. Continental languages, French and German were considered to be somehow more relevant because we harkened back to the old country, to England. And so I took French.
And don't forget, it also harkened back to colonialism.
Yeah, exactly. So I took French in school and promptly left school, never spoke a word of French, never went to France, never went anywhere. And fast forward to those periods of time when I got to Vietnam, so we're talking about 20 years on almost, or 17, 15 years on, I got to Vietnam, started to learn, because we did, our hotel's policy was foreigners should have some Vietnamese, started to learn in our own, we had our own team, our own training team, Vietnamese, and then realized that, again, this is a little bit of my DNA. I'm not really good at structured learning, but I'm really good at just kind of jumping in and immersing, and so immersion learning. So I just used to go on the street as much as I was allowed to, right? I was not supposed to go anywhere without a bodyguard, and I mean, literally security, all that sort of stuff. Back in the day, it was a bit, but I used to go on the street, eat and drink at local cafes on the street. And just by walking around them and trying to engage and kind of pretending you couldn't do anything and there was only one way to learn, that was to parrot or to replicate what they were saying, I picked up a little bit of a flow. And I think once you get a bit of a flow, at least for the basics like, hello, how are you? I'd like a coffee. It's hot, a coffee that's hot, a beer that's cold, all that sort of stuff. You kind of break through. And after that, I guess I've improved somewhat, but I would say that I spent a lot of time working and not as much time as I probably could on personal development back in the day. But I used to get by. Yes, I can still now have conversations with some of the people I made who are still friends back in the day, but not nearly as good as my German. Funny enough, right? When you've got a reason to become fluent in a language, you do.
Yeah. And probably French was pretty useful in Vietnam too, because the French had occupied Vietnam before the Americans. So,
Yeah.
but let's cut to the entrepreneurs. You said you had your business up till 5 years ago. You're helping companies set up in Vietnam, set up shop in Vietnam or Cambodia or Laos. Can you tell me what caused you to make the turn or the pivot toward directly helping entrepreneurs and
Yeah.
investing in entrepreneurship and founders?
So I've actually gone through a couple of transitions. That early business in Vietnam worked quite well and was let to be run by someone else when we left. Um, but I guess I had a second or a third, if you like, iteration of my life. I almost feel like I've reinvented myself a couple of times because it just needed to be freshen myself up. So I had another period in life where, although we had a company in Hong Kong, that was a Hong Kong company that was doing business in Vietnam. Um, I actually left and spent a good deal of time based in Europe. So that came about fortuitously. I was back home on holidays, and I came through a mutual friend. I met an older gentleman at the time who was a classically trained Austrian by nationality, a classically trained pianist, like he was literally a concert pianist, who then went and did architecture, studied architecture, and was also an architect and working in an architectural firm in Chicago. And for some reason got sick of that and was walking down the street one day, saw a sign saying traders wanted, and became a, a commodity trader. Later on, a very, very successful foreign exchange trader, had one of the first black box systems, we would now say algorithmic trading systems in the day. And I joined him and we did 4 or 5 years of fund management, FX fund management. So I had a successful fund management sort of period of my time as well, and also trading commodities. So that led into the next stage, which is what we're talking about. After you've traded commodities, meaning you've done transactional work where you've made and lost a lot of money over a period of time, but the net effect is, you may have been up, you may have been down, but if you were up, someone else was down because it's a net zero game oftentimes, but you don't see any result. So you've done all this maybe for 5 or 10 years. And what can you show for it besides a bank balance is moving? Nothing, right? You can't show people having learned something or people now growing up in the world, or you can't show how many jobs you've created. You can't show anything like GNP growth or anything to do with long-term sustainable improvement in something other than just money. You kind of, I think anyone would come to the point where you say, this is not really something that's sustainable. It doesn't feel like it's going anywhere. So it was then that I started looking around and seeing, what can I do with my talent, my skill set that's useful, that's like going to help me. It's going to nourish me, but it's actually going to help other people. And again, I come back to this thing inside me that's been pushing me all my life. And so actually, I didn't start initially investing and an angel and mentoring and angel investing. I actually jumped in initially as a adjunct lecturer. I kind of was here in Singapore, found a couple of colleges that were looking for lecturers on the Bachelor of Business program or Bachelor of Economics program, and I started devoting hours. I mean, literally days. In some cases, I was lecturing 3 out of 4 or 4 out of 5 days on very little salary. It was almost free, but it was for no surprise, it was for Vietnamese students who would come from Vietnam into Singapore to do their bachelor's degree. So again, I had the affinity. I could speak a bit of the language, and I did that for a few years, and then it was that kind of got me opened up to the idea of the concept of mentoring or giving back. And then I joined the what they call Startup Bootcamp Accelerator here in Singapore and Seed Stars, and was mentoring, I guess, on a regular basis, probably 2 or 3 times a week I'd turn up. In those days, it was one of those structured things where they had sessions for people like me who'd go in and, you do a session, you do a particular, let's say, a 1-hour delivery on maybe the fundraising structuring of a startup, etc. And then you do ad hoc mentoring with the individual people you liked and connected to. So I was happy to do that, and that got me into angel investing, because at the end of these accelerations, they have these demo days, right? These pitch sessions, and you get a chance to relate to them and say, I'd like to invest with you. I'd like to kind of be part of that. But I guess my first 3 or 4 investments as an angel were people who I'd mentored, and that kind of got me into the concept. And from there, I guess I iterated many times to the kind of where we are today in terms of the business model.
So typically, will you? I want to talk, and I should mention we're talking with James Spurway. He's from Indochina Consulting. He's sometimes called the fundraising angel. He helps entrepreneurs. And one of the things I like about what you do, James, is you have an eye out for the, I want to say this in a nice way. I know you've called them misfits and cockroaches, but you have an eye out for the entrepreneur who is not fully formed, who is not fully polished. That's kind of a soft spot for you. And you find a lot of value there, I imagine.
Yeah, I mean, I say that, and I think when I talk to people, I obviously don't say cockroach in a bad way, but it's the, let's say, the kind of concept that I have of someone who just won't go away, right? Who's almost impossible to, I hate the word kill, but kind of like to get rid of. And that's
the survivor, right? The cockroach
right.
is the ultimate survivor. Yeah.
And the misfit side is because if you looked at their profile and you compared that to what might be considered to be the profile of some of the larger successful companies, unicorn companies, they don't look like they would have ever had any chance or would likely become a unicorn. What do I mean? I mean, there's 2 classes of people in this section, or this thing called startups. There's the typical ones, and the ones who kind of think about stereotypical ones, where we talk about people who've gone through an Ivy League college in the US, Stanford, Harvard, Wharton, UCLA, something like that, and then gone probably from there into one of the top 5 or 6 accelerators. You can think of who they are, and then out of that acceleration, they've probably been funded partially or fully on their first round. So without ever having to go through what I have to go through with my mentees, which is that fundraising process, they've really kind of managed to set themselves up in their first business. Now, whether that business succeeds and gets a Series A, Series B, Series C, etc. funding is not necessarily set in stone, but many of them do. So that's one path you might say that gets you into becoming a founder and potentially a successful founder. Anyone who doesn't have that profile, maybe the next layer below that is people in the US who, again, have a better potential opportunity and percentage-wise a chance of success than anyone outside the US. And so your third level is anyone outside the US. And then with that sort of outside the US, it depends what country you come from as to how far down the tree you are, how far down the pecking order you are. So you can imagine that someone from Vietnam or someone from Indonesia is probably way, way, way down in terms of, I'm not saying that the venture capital funds from the US don't have their regional sort of partners and their regional setups looking for talent, and local accelerators and local VCs as well. But there's probably still not enough to go around. So it is a bit of a case of those founders do need a little bit of luck to get from where they are into the spotlight or into the mainstream to have a chance to eventually become large and successful, if that's what they want. And not everyone wants to become a unicorn. Thank heavens, I would say. So yes, I don't, because I don't have that pedigree. Poor farm boy from Australia, dropped out of school, 10 years later went and did a Bachelor of Business when he was almost 30. I mean, no chance of doing an MBA. I was too busy working and doing business and making money to get that postgrad. And so I don't kind of fit the mold myself. And I think if you don't, it'd be weird for me to be kind of saying I kind of really relate to the people coming through that top stream, because I can't. I don't come from that background. So I do relate to the others. It's a natural fit. I help them. And I think in the process, they get a lot out of it. And I guess the other thing about helping people who are not typically the top numbers in terms of startups is that I think if I did my numbers, I'd look at them as being potentially more likely to succeed given the right opportunities and circumstances, because they're used to let's say, hardship. They've come through hardship. They're resilient, more likely to succeed with given the same amount of money and the same opportunities than anyone who's come through almost like a sort of gifted, very, very easy, not much problem sort of a background, because they've never faced hardship or resilience or problems.
Let me ask you this. So let's put some meat on the bones of this idea. I'm going to call your method the Spurway. This is the Spurway, not the other way. This is the Spurway. So give us an example of an entrepreneur that fits that description that you are particularly proud of having worked with.
Okay, there's a couple. So in recent times, it's been female founders who I know. For example, I've went through and mentored in a couple of accelerators. A bit of a shout out here. There's a company called Creatella in Singapore. They run an impact acceleration and venture studio. And in the 2021 and 2022 iterations of She Disrupts, so She Disrupts Indonesia, She Disrupts Vietnam, and I'll be doing the She Disrupts Philippines in April, I met some teams who, at the start in Indonesia, were not even really confident speaking English. That was like first meeting, first kind of mentorship. 4 months later, when they did the demo day, they were as polished and as confident and as bright as any founder I've ever seen. And I attend the 500 Startups Demo Days. I attend these big OG, original gangster, VC, Silicon Valley VC startup days, demo days. And I love their amazing kind of teams who are kind of, really, really high energy, super focused. They polish their pitch. They worked on who presents what. But I'm telling you,
what's the name of the company and the name of the entrepreneurs? I want to make sure we don't miss out on that.
In Indonesia, one's called Plepah, Plepah, right? And that team is all about helping local communities through, basically, it's all about food conversation, recycling, not wasting food, right? Not wasting the actual, so it's all about food security, I suppose you'd say. So they in Indonesia are doing quite well. And then recently in Vietnam, it's a company called EQUO, and they've got recycled straws, things like straws out of rice, that they actually get something which is edible but also biodegradable. So and they're both female founding, actually majority female teams, but female founders. So Indonesia and Vietnam. Look, the one in Vietnam, I first met them on a demonstration situation where I was a judge. I then took them to one of my own competitions. I ran a competition so they could get a bit more exposure. They've now gone through, I think, the third demonstration, pitching sort of session, and now they're well on the way with the amount of money they've raised from angels and also now VC. They'll be hitting the US market soon, so they'll be actually going from Vietnam to the US, and that's what I mean by it might not be the kind of traditional trajectory, but these founders from Asia, if they in fact need to get into the US market to become, let's say, large, successful, multinational, global, whatever, they can make it. They might not look the part in some ways, and they'll always be not quite the same, but their tenacity, once they get told what to do and how to do it, they just execute. And that's what it is. I mean, Michael, ideas are not worth much, right? It's all about execution. It's all about your ability to deliver.
Yeah, no question about that. And also, any Asian entrepreneur coming from Asia, different parts of Asia, like Vietnam, they're coming into a United States whose attitude about the Asian population is growing and expanding to include lots of talented people. In fact, there's a dispute in the U.S. right now about if they actually admitted people to schools like Harvard, like you mentioned, based on merit and scores, they would be 85% Asian, and that's a real issue in the United States. But James, let me ask you this: where can people find you? What's the best way to contact you?
I'm a little bit weird in that regard. I don't hang out in social much. I mean, I've got a Twitter handle, but generally it's always LinkedIn. And I suppose that's a little bit old school, showing my age, but most people find me through LinkedIn. So, I
That's how
mean,
I
the
found
J,
you. That's how I
yeah,
found you. And I just also want to say something about your philosophy because I've been doing lots of interviews. I've been meeting all kinds of new people all over the world. But you maybe because you actually come from a dirt poor family, which is very moving and unusual in this day and age. I think that it has endowed you with a big heart, is how I would put
yeah,
it, and
yeah.
that you really have. I can tell, and I'm sure our listeners on the accelerator can tell that you have an attachment to these entrepreneurs and a pride that is not all that far from parental.
Yes, yeah, you're right. You're right. It actually it does have a bit of that, and I know that that's probably how I feel at the time. The old chuck them under the wing and get them through. But I mean, you'd have to be a bit silly though to not think that that's also commercially smart. And I'm not looking at the commercial side as being the leader, but I know that I'd be wrong to say that this won't make sense commercially as well. It will. If I was looking at this in a number sense, analytically, in the statistical analysis, I would say that if I'd be happy to match 100 of those startups that I chose against 100, say, from the US, and I think my win-loss ratio would be higher. Well, I don't think, I know it's going to be higher because one of the problems, it's not really a problem, but one of the issues I have with the traditional venture model, which is the unicorn hunting or unicorn-centric model, is that they kind of have the approach that we'll just let everything play out. It's almost like the jungle out there. So they'll have 100 bets and they presume, and I mean this is built into the model that 50 to 60% will fail, and that they'll in that 30% or 35% that succeed, they've got their one or two unicorns, they've got their maybe 10 doing 10x, 10 doing 5x, and maybe a few doing 1 to 3x, and so their average return for the whole 100 is going to be something like um, 2 to 3 times or 3 to 4 times, between 200% and 400% over 10 years. But that doesn't really, Michael, stack up in terms of, if you look at the last 10 years and do some numbers, venture, US venture, Europe venture, Asia venture, global venture is doing about an average of 15% IRR over 10 years. That's not stellar. That's not like super. And one of the reasons I believe is because their concept of letting those founders which they've invested in, but then don't seem to take off, right? They get the money, but they don't then grow dramatically. As soon as they don't grow dramatically for a few quarters, they kind of like cut loose in the sense of they just aren't given more um, mentoring, nurturing, whatever you want to call it. And I think that's the difference between what I do and what they do. I'm probably insane to spend the amount of time I do with each founder of each startup that I invest in, because I figure it's my way of making sure they succeed, not hoping they succeed, not leaving it up to chance, but lifting them up if necessary, and sometimes probably being a bit blunt and a bit hard on them, and to get them to see that they're not going in the right direction. They told me they want to succeed, they're not. So it's a bit like parenting. It's holding them to account. And I think if more people did that on their portfolios, they would get maybe, instead of 60 to 70, 50 to 60% failing, they might get 30% failing, or at least maybe 50-50. But then if you do, you just have to work out the numbers. There's no pressure on you to do unicorns. There's this pressure on you to do fairly good returns across a larger number, N, and your portfolio return is going to be better than a standard sort of VC model. So again, I'm trying to break or bend what's given to me as being the way you do it, and I'm willing to go my own way and do it almost like a real-time A/B test for the next 7 to 8, 10 years and see whether I'm right or they're right.
Well, it's a great model and it's unique, but isn't it ironic that VCs are looking for founders who won't give up, and yet they give up on founders, or some do, pretty easily, and that's not a great thing. But I want to
It's
thank you, James. Yeah,
yeah.
go ahead.
No, think it's just the nature of the business. I don't think the actual founders, sorry, the guys, ladies who run VCs, the partners, I don't think they intentionally want to, but I think they're driven to it. It's just one of the things. It's a fast-paced pressure situation. They're getting funding in. They've got to deploy, and once they deploy, their model is I've got to raise more because after all, they're getting 2% management, 20% carry. They're in the business of just growing that way, right? Not spending a lot of time in the weeds.
Yeah.
And I think that's why I'm saying I've got the flexibility of being light. I mean, at this stage, and if I become a venture fund later this year, this year's my goal to get my own fund together. I may, if you ask me in 3 years' time, I may be kind of going, I get it. I understand why they do that. But I mean, I hope I don't. I hope I can stay the course.
Well, listen, we definitely want you to come back when you get to that point. And it's been a pleasure. This is the Accelerator with Michael Conniff, speaking with James Spurway, who has been in Singapore for 31 years, known as the fundraising angel. Great hands-on impact investing with founders who are not cut from the same cloth as the ones that get all the publicity. But that was really why I wanted to have you on, James. And I want to thank you so much, and I hope you'll stay in touch and always come back to us with more of your wisdom. Appreciate it.
Happy to. No, and it's been great. Thank you for the chance to get out there and get that message out there. Okay, ciao.
All right, appreciate it.